I don't trust AI 100%.
I strongly believe the next asset class that will really pick a huge scale will be private credit.
People call that AI, but we know it's not AI. Tony, Jitendra, welcome. How are you guys doing?
Good.
Great.
Welcome to Real World Value, where we look at the universal economy that's coming, powered by RWAs and also stablecoins, and of course the consumer dApps that will reach the mainstream in this cycle. So today we have two integrators of universal accounts of particle networks infrastructure. We have Helix, who's represented by Jitendra, and Minara, who's represented by Tony. So I'll ask you guys to give a quick rundown of what it is that your projects do and why I'm so excited to see them go live with universal accounts. Want to start, Jitendra?
Sure. So thanks for hosting us. It's amazing meeting around the sidelines of Korea Blockchain Week. Helix is an orchestration layer for RWAs and stablecoin, building a unified modular infrastructure to enable the mainstream adoption of stablecoins and RWAs across large traditional institutions as well as mass markets.
All right, Tony.
So Minara is where the alpha coming from. What a fancy sentence, right? So long story short. So let me just adjust a little bit. So long story short, the Minara is the Web3 ChatGPT and can help you to distinguish the alpha, help you do from the analyze and to the trading, leveraging the AI's power to help you do whatever you want in Web3 world, whatever you want to ask for. What is the hottest news today? Why Aether getting pumped such a lot? Why I doing this trading strategy and then lose some money? Give me some suggestion. Everything. You ask this AI and she will give you an answer.
All right, brilliant. Yeah, and I love the CFO concept. Brilliant. I think to start with, obviously, as I said, you both have integrated universal accounts into your products. So, and you on your own being orchestration project, you're very into the chain abstraction field.
Absolutely.
So I'll start with a question for you. What do you think? How did you make this connection between RWAs and chain abstraction, or in your case, orchestration?
Sure. So from where we are seeing, if you look at the macro trend of RWAs and stablecoin, we can see the regulation. The regulations are in, the institutions are coming in. Particularly with the passing of Genius Act, there are a lot of countries who are very actively looking at stablecoins and RWAs. The market cap of RWAs has really grown and reached $270 billion plus. So the demand is clearly there. But if you look at the infrastructure rails, we believe that still is broken because the Web3 stack is too complex for a Web2 corporate or a TradFi to come and tokenize and bring that product in a mainstream way. I mean, it's one thing to just create a token out of an RWA, but the bigger things is how you enable the adoption. And so where we are sitting, we believe there needs to be a simplified tech layer which could work with abstraction players like yourselves and others on the interoperability side, wallet infrastructure, gasless transactions, all of that, and then create a technology layer which is very, very geared towards TradFi and institutions and RWAs and stablecoins, and that's what we are doing to bring in a ready tech layer which any TradFi issuers could then use to launch their own tokenized products and stablecoins, and we are kind of working with a few institutions to do pilots using this orchestration. So that's one part of it. The second part that we have is a yield product of our own, where we bring multi-strategy yield offerings in a DeFi composable manner. So I think the demand is there, but the Web3 stack is too complex, and that's where an abstracted infrastructure is really required to really unlock the institutional and mass adoption in a mainstream way for this programmable finance construct, basically.
That's a great answer, and totally agree. The financial rails are still being built to a great degree. So
precisely,
everything, in my opinion, personally, just to freestyle a little bit more, in my opinion, there are two plays in crypto right now because tokenization is the big thing, and tokenization is the thing that's going to be everywhere. You either build applications that fully leverage these assets, or you build the rails to support their transacting and their usage. And actually, you're quite good examples of each of these plays. So Tony, what's the how did you find the infrastructure for integrating AI with Web3? Like how's what was the panorama for that? Because I reckon you're sitting in a very unique space where the only AI projects right now are like either tokenized compute, which is a very good legit use case, and then shit coins with an AI bot on Twitter, which is like people call that AI, but we know it's not AI. So how do you find that infrastructure, and how did you decide to also integrate chain abstraction into what you do?
Good question. Yes. So basically, what we think is exactly what Helix, you guys doing on RWA and infrastructure. We think the trend we find it as well. First thing is like Nasdaq and also Bloomberg, Robinhood, those unicorns try to do the stock tokenization and all the financial product on chain. There will be a trend, and we find there is very interesting edge on the crypto. That is, if you want all the retails using the AI to finish the all-in-one experience. What is the all-in-one experience? From the registering, secondly, analyze, third thing is testing, fourth thing is trade. If you want to make that a loop in one certain product, it should be crypto. It should be on-chain. Because think about that. Even if these days so many like Web2 AI bots like can help you to trading the US stocks or like the Chinese A stocks, right? But you cannot let them to do the KYC. I mean, AI cannot help you do KYC on a centralized exchange, while everything on chain, no KYC, permissionless. If you want to get a 100x leverage, you can do that. You just ask AI to do that. So that's why we find this trend. That's the first thing. And secondly, I think maybe some of you guys know about me because of I built the NFT Go 3-4 years ago. Don't get me wrong, NFT Go is still alive. NFT is also good, but we just want to be more emphasized into this crypto plus AI this trend. So we have the data about all the NFT and also the crypto infrastructure in the last 4 years. That's why we built our own LLM for the Web3 vertically. We do fine tuning for several months of that, and then that's why our AI have the wisdom in the Web3 and help you to find alpha, help you do the execution for the trades.
All right. Do you want to do us a quick showcase of the AI values?
Of course.
So that people can look at it. I reckon, like I've told you this out of camera, I think the product's fantastic. I really like the design.
Thank you for your word.
And your team is also very nice.
Yeah.
Shout out to Lisa.
Yeah, well, like give you guys a quick run through. It's just a beta launch. I mean, it's live, but not fully launched.
Okay.
So from the first second, you will see the landing page, but it's super easy. Click End App, and the AI will set up for you our new wallet. It's an AI custodian wallet, and you can just do deposit everything. And we are backed up by Circle, investing by Circle. Thanks for them, and they can help us to integrate with some of the credit card and such approaches from the fiat to the crypto. So,
by the way, Circle will also be in this podcast. Subscribe.
Oh wow, yeah.
so you guys can catch it.
Please, yeah. All of you guys, right? Okay.
You too.
Yeah, me too. Yeah. We'll do it. And yeah, just one fancy use case is like Acer is very popular these days. So I asked this question. I don't know if you guys can see that. So how is the Acer these days? Why is pumping up such a lot? Can you find me some Twitter KOs that support it mostly and bullish on? It's 3 different questions, but in one sentence. And then our Minara can help you to find, okay, why Acer being pumped up such a lot? Definitely the first one is the CZ endorsement, right? And also the revenue dominance, blah, blah, blah. And it's similar as the Hyperliquid and so many like isotoric bags from the Hyperliquid comes into the Aster. That's why. And the numbers don't lie, blah, 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 about the quantitative analyst. And she can also find you some Twitter KOLs that supported the most. This KOL, I don't know what is that, but it follows 1 million. Whoa, that's big. And tier 2 KOLs, several with several hundred K. Oh, wow. That's a lot of people supported. And bullish takers, smart money, fundamental focus is smart money. What did they say? Everything is here. And the airdrop factor, she can also find that. I don't even know that. The phase 2 airdrop will be 4% of the total supply. So there's a lot of things just for these use cases and help you to find what you want. Yeah.
Brilliant. Go for it.
No, this is great.
Thank you, yeah. And we also use chain agnostic something, yeah, for sure.
Yeah, I mean, this is built on universal accounts, so you can deposit to it from any chain and I think that's beautiful.
Universal is the best. Come on.
Jitendra, man, obviously your product is a lot different. It cannot be shown like this. It's not a single application.
Yeah.
What do you think, like, the average crypto investor, crypto degen, how do you think they should think about what you do? How do you think, like, it's easier for them to wrap their minds around all this orchestration and all the RWAs and so on?
Sure. So, if you look at the whole stablecoin space, we see that the money is getting tokenized. And that's the trend going on with the Genius Act passing. Now, any Web2 corporate can
never gonna end.
Can launch their own stablecoin today. Tomorrow, Amazon can come and launch their stablecoin. Walmart can launch their own stablecoin, and we are actually seeing that happening. There are a lot of regulators and jurisdictions which are actively looking at that. So we are seeing a clear trend of money is getting tokenized, and this tokenized money would need tokenized yield. And obviously, there are aspects of yield that could come from the broader DeFi and crypto ecosystem, but there will always be angle to diversification. And what that means is the real-world financial instruments would need to be made available in a tokenized version on-chain natively. And that's what we are focused at, enabling that whole, orchestration of bringing real-world financial instrument, made available natively on an on-chain ecosystem, while being still, regulatory compliant, taking care of a lot of different things which is required. Even RWAs are quite a complicated offering if you really want to do it correctly. On one end, you will have all the different fragmented issuance and redemption frameworks and processes. On other end, you need very custom kind of smart contracts. You need abstraction of wallets, chains, gasless transactions. A Web2 user will not know which chain, what wallet, where do I get the ETH to do the transactions and all of that. So all of that needs to be really abstracted out. And then a big element, which is, how do I do the on-chain compliance and risk monitoring? In a TradFi sense, you will have these sanctions list and OFAC list, etc. Could there be an equivalent in an on-chain construct? How do I take care of security and custody and all those aspects? So basically, tokenized money will need tokenized yield, and this tokenized yield could be enabled if we have the right kind of infrastructure. And that's where kind of Helix comes into picture, where we're taking care of all of that so that the right kind of products could come on chain in a very, very frictionless manner, and preferably in a DeFi composable manner.
All right.
Yeah.
Can I ask you some questions?
Yeah.
I want to know, from your standpoint, if some Web2 asset coming to the Web3 through the RWA something, what do you think is most frequent asset that being mentioned about? It's like some traditional stocks, like some commodity, or how is it from different?
So the most natural products that fit into the whole DeFi construct is any fixed income instrument. That's the first wave. Obviously, if you look at the current trend, this is mostly T-bills and money market funds. I strongly believe the next asset class that will really pick a huge scale would be private credit. And there are segments within private credit like PayFi, which are shorter tenured, or embedded financing. So if you look at most of the payment gateways or B2B e-commerce wholesale companies, they eventually want to get into the business of financing merchants who are on their network, because they have access to data about those merchants, which banks wouldn't have. And when these players, when they want to do this embedded financing, initially they will do a pilot using their own balance sheet, but eventually they will need capital. And because they are non-bank, they are not banks, so they cannot take customer deposits. So they always look out for diversified sources of capital so that they could generate these loans. Yes. So these are the kind of assets I see would really pick the next wave. Then we are seeing also a lot of traction on the gold side, particularly on the commodities. Obviously, real estate has been there, but it has its own trajectory. But fixed income kind of instruments, treasuries, money market funds, private credit assets are the kind of assets which are quite naturally fit into the whole DeFi construct. And I think those would see a massive adoption in the coming years.
Just one follow-up question for that. What do you think from the legal standpoint?
I love it. You're doing my job.
No, sorry for interrupting.
No, go for it.
I will finish really quick. So how's the yield looks like from the legal standpoint? Because of let's say from the housing market, and if you pay the yield, it coming from the real cash or from the fiat traditional world, right? But how is coming through the DeFi protocol and sending it back to the LPs or like some like yield farmers? How does it look like?
So every RWA product would always have an off-ramp aspect to it.
Yes.
Because eventually it is basically getting into a real-world financial instrument. So there's always an off-ramp component when it comes to deploying the capital, and then there is an on-ramp component when it comes to bringing back the returns or rewards back to the investors. So and that's where there's also an element of when it comes to on-chain, the asset is completely on-chain. So your value, your transfer, all of that is on-chain. But when it comes to RWAs, at some point the money gets, the stablecoin gets off-ramped. Yes. And what that means is then you need the right kind of risk management, as well as, another thing that we are working on specifically is ZK credit and risk assessment. So there's an element of providing this credit risk assessment in an on-chain construct using a zero-knowledge architecture. So that kind of allows, real-world asset managers and curators to look at an asset and then provide an on-chain attestation of this is what the credit risk looks like. That's one element. The second element comes is around the whole price oracle and proof of reserve kind of infrastructure. So in order to bring an RWA on-chain, there's a lot that needs to be done around it to make it like to make it almost like a native citizen of a blockchain or a DeFi economy, with always off-ramp, on-ramp element involved until the entire finance runs on-chain, which I think we are still 3 to 5 to 10 years away. But that's how it is right now.
Thank you for that.
Yeah.
That's really great. Thank you for asking that question. Like I wouldn't have thought of it, but the explanation was quite good as well. And since he's already sort of given us this is going right into the question I was going to ask anyways. Since he's sort of given us a roadmap of like the adoption of RWAs and what needs to happen first and next and so on, as well as, like you said, the architecture needed to make this orchestration layer like a native citizen of Web3. What do you think is the AI version of that? Like, where do you think like real AI in Web3 will start, and where do you think it's going, especially with the type of use cases that need to be launched first and then next?
Good point. So I think there are two different ways in Web3 I see from the whole AI. Indeed, it's 3 different trends from the AI perspective. The first thing is about entertainment. Like if you interact with AI, like some of the cartoon ones, and you play to earn something, that's one part of the Web3 projects to like combine with AI. Second thing is about the AI decentralization. Something like get the data or using some kind of this credit system to incentivize the people to provide whatever the personal data or financial data to feed some AI, or to help the traditional Web2 AIs to growing. That's more from the fundamental level, and using some zero knowledge improvement or some sharding strategy to combine with the AI. That's the second wave. The third wave is treat Web3 as a financial market, and AI can bring the frictionless financial coming to being to every single retails. So that's what we are doing. Like the traditional financial world sucks, and that's why we need to get it on-chain, and AI can help you to directly onboard on-chain and do anything you want. So that's on the 3 different waves. And I do believe the first and second, they also have some big potential, but still from the technical standpoint, the second one takes some time. I should say the infrastructure for the data sharing, this kind of thing is still not very robust. And the first thing is all about if the entertainment is good enough, right? And the third thing, I think mostly is about how you to incorporate your data. I mean, AI is all about data. Like whatever from financial data, you do fine tuning, you do prompt engineering, and to training your AI model to make it more comfortable to any retails when they ask financial questions and give you the best answer and help you to at least feel, okay, that's the alpha. I want to ape into that, right? Like today, I will say, okay, like let's buy Particle, the token, right? And I will see that and say, oh, okay, that's it. But okay, Particle to the moon. Today they get 20% up and 100 smart money flows in and so many CZ is shut out. And so on. Oh yeah, that's better. Let's buy it now. Let's ape into that. You need to give them reason. You need to give the people FOMO. So that's how the AI model should be trained for and give the people sense. So we're working on the third one and to make people, okay, when they feel, okay, that's the thing. And then click to buy or tell the AI, buy me the A-star token or buy me the particle token. One is getting 5% up and 10% of the smart money ape in. And also the key line shows the volume is getting bigger in last 3 hours. Give these conditions, AI set you up of the workflow and make you happen. That's our vision.
So are you seeing more of like AI agents taking over all of this, or
Yes.
more like providing info to the user and let the user take the action? Like, what is the kind of future you're seeing here?
That's another good question. I should say that's about the first step and second step. Like, I don't think people will, even me, I don't trust AI 100%. So we would provide 2 different ways. The first is AI give you analysts and give you the button, buy and sell. You can set up, it's like through clicks. And second thing is we provide a premium feature called workflow. You just tell AI to do anything. You just tell AI what you want. Like buy me when the Bitcoin coming down to 4,000 and one blah, 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 blah. And he will set up the workflow for you and do it automatically. But I still think nowadays, so my vision is, this is a whole big picture. So think about that. 400 years ago, when it's coming to the industrialization of the revolution, when people going to the London stock market, they need to go offline and tell the broker to sign the contract to trade the stocks. And in the 20th century, you can just call the broker, say, hey, I want to buy this and I want to sell this. That's the second thing. But from the third one, when Nasdaq coming to being, that's literally the first time the retailers can use their own hands to click buy and sell to make it 24/7. But it only 30 years ago, only 30, 40 years, not very long. Why AI cannot dominate anything? Why the people in the next era should click buy and sell and to see the key line, what does that mean? What's the volume it is? What's the data it is? No, you just tell AI. You just tell AI to help you distinguish that, like human talks, and let AI do everything. That's the next phase. So next phase is that, but maybe it takes 10 years to go. So we will let firstly AI to give you analytics and you do trades. But afterwards, we want make everything all in one, make everything automatically.
Beautiful. I think you remind me of the idea that so far humans had to learn computers, now computers have to learn humans. And it's like, okay, this is the kind of wheel I'm looking at, and then let them figure out. I guess I foresee that feature coming in.
Yeah, that's the future.
That's a good one. And then, like, you wonder to what point, like, we're going to learn trading ever. Like, because, you know, these things are going to come up with their own strategies, aren't they? So, like... trading is very esoteric. It's very like gut-based. I wonder like how these AIs are gonna, what's it gonna result? Because also in the future is gonna be a lot of AIs trading against AIs, isn't it?
Yeah, definitely.
Like you're gonna have AIs in both sides of the trade, and
I mean, so there will be some private AI bots, right? And there will be some public ones.
oh yeah,
So,
and the competition between them is gonna be huge.
yeah, that's the thing. Yeah. Because of this remind me of my, I play chess. The Asian ones, the Chinese ones, are called Go.
Go.
I play Go. Yeah, I'm semi-professional ones when I was very young, and I played really good. And when the 2016, the Google, they have the AlphaGo coming to being and just get messed up all of the human beings, this Go player, that give me the very shocked feeling. That is, okay, I think the Go is the most complicated, the games that the human beings
It took it like
find.
30 more years than it took it to beat chess, right? So
Yeah,
like
yeah.
it was already beating Kasparov in the 80s, but it was only in the 2000 and somethings when it beat Go.
Yeah, like takes long time from the chess to Go, but it finally happens.
Yeah.
So about financial markets, that's also the game made by a human being. I think it's also will be finally there. And the AI, if you don't know AI it is, and you cannot make one even single penny. Another thing is, even AlphaGo nowadays is being 9 years.
Yeah.
Now the AI using LLM, the new the new tensions ones can beat the AlphaGo as the first one very easily. So AI also compete with each other. So that's how financial markets works in the future too, I think.
Right. And I mean, yeah, going back into topic because I want to talk about I want to talk
absolutely.
about Go
Yeah.
because that documentary about the machine that beat Go is fucking fantastic. I highly recommend it. It's on YouTube. We can also just talk about the documentary, but you told me that you had a very interesting perspective when it comes to the institutional views on the RWA market, and I'm really curious about this because, like, these days, of course, particle. We're still doing the same thing, universal accounts, but we're trying to integrate more RWAs into our system and our system into more RWA providers, right? So one thing that I've noticed talking to people in this podcast and outside of it about RWAs is that there is pretty much everyone has their own vision of how it should be done.
Yeah.
You see it from the tokenization itself to the legal strategies to pretty much everything. So, like, what views are you finding that surprise you, or that you think are gonna shape the direction of the RWA field?
Yeah, I mean, like, if you look at what most of the TradFi institutions have done so far is they have tokenized their products, but they're tokenized their products for Web3 stablecoin liquidity, be it Franklin Templeton's Benji or BlackRock's Biddle. All these products are not tokenized for the mainstream use cases. This was more like, okay, I have this product, I tokenize this so that I can get a diversified pool of liquidity coming from Web3 stablecoin liquidity. So that tokenization in context of I have a fund, I have a fixed income instrument, or I have an RWA product, I tokenize it so that I can get Web3 liquidity, which itself is a good place to be in, because if you look at 2 years earlier, the space was every TradFi institution was having, setting up their teams, and they were doing like, small labs project, like, the prototyping, sandboxing, but nobody was really launching production grade products. And now we see that happening. At least like tokenizing my products to bring it to the Web3 stablecoin liquidity holders. And through that exercise, they are getting a peek into how exactly this works. But it hasn't yet unlocked, like, could these tokenized products go back to the mainstream? Like, could these, if you look at, like, for example, many of these institutional products, typically they will have very large ticket size, like 500K or 100K USD and all of that, which means like even if they are tokenized, they are not yet accessible by the mass markets and retails, or even working professional to some extent. So in order for that to happen, there needs to be a lot that needs to be done on the regulatory side, but also on the infrastructure side. For example, if you bring this product to the mainstream, now you need to make sure these, the mainstream users don't have to worry about which chain, where do I get, how do I pay gas fee, and where is my wallet, and do I need to remember the seed phrase, and all of those are friction points. So that's where all the abstraction infrastructure comes into picture. Abstraction of chains, abstraction of wallets, abstraction of custody,
Accounts.
Abstraction of gas fee. These are all the required constructs and supported by the regulatory framework, and that unlocks it. And we are seeing institutions are looking in that direction, particularly in and around, money market and stablecoin kind of products, and bringing them to things like, retail chains or using them behind loyalty points. I'll see many of those become the first of the use cases, where let's say you have these loyalty points, and right now these loyalty points there could potentially theoretically be a tokenized money market fund behind them. So these loyalty points could actually generate yield in some shape or form. Or people could have these, deposit or savings account kind of construct behind them. So those are the kind of use cases that will start unlocking very soon. I think I foresee that happening in the next 2 years itself. And then it goes from there.
I have a question outside of like the scope of your projects for both of you guys, how much do you believe in cycles? Like how much do you think we're actually doing like a 4-year cycle every time, and like that's gonna continue being the case? If you want to start.
I mean, like, again, looking from an RWA tokenization context, we feel and we strongly believe that, the one use case that have really come out of this entire blockchain Web3 is stablecoins.
Yeah, payments.
When the internet revolution was happening, obviously we had a lot of pet.com and cat.com and all of that happened, but eventually there was a Google and Amazon and a lot of
PayPal
and PayPal and all those came out, and from the whole Web3 blockchain revolution, I think the products that will definitely continue to stay, or the use cases that are evolving out is stable coins, tokenization, potential use cases on the trading and settlement layers. So I was previously working with an investment bank, and I was taking care of platforms that would reconcile these trades. So you have an asset management trader trading with a broker dealer, and then you have a ledger entry on the asset manager side. You have a ledger entry on the broker dealer side, and then there is a T+1 next day. There's a reconciliation happening because both of them have their own entries. With blockchain, all of that becomes quite efficient. So things like stable coins, things like remittances, trade settlements, all of those are actual real use cases that could be solved using the blockchain, and I foresee that happening. Not very far, like hardly like next 3 to 5 years is what my personal views are.
Okay. Yeah. And when it comes to cycles, the reason I'm asking about cycles is because like in crypto, there's a lot of misrepresentation of how fast like these new regulations are gonna hit, how fast the adoption is gonna happen, how fast like. Yeah, even stuff like AI integrations, like you're saying it takes time, we're building this layer and then this layer and then this layer. It'll take time, and obviously in crypto, we want everything last week. So if the cycles stand as they have, it might be a little bit unfortunate that the big moment for stablecoin adoption in terms of like institutional capture, it will happen in 2 years when we're supposed to be down. And I think it's obviously a psychological factor in crypto. There's no written law that says things have to be that way, but it definitely gives me like a perspective of like that the future might still be altered by all of this. How do you see that cyclical nature?
So firstly, from how the builder's perspective, I do think the 4-year cycle, every 4-year cycle, there will be some fancy concept coming to being. And I do expect...
Always a fancy one and a stupid one.
Always a fancy and stupid one. Okay. Some of the stupid ones, some of the... most of them stupid one, whatever. Yeah, just... I do believe next cycle will be some fancy ones, like the metaverse. Because of... definitely I have some bias because I'm running for NFT for so long time. So like metaverse, with some the AR and VR technology coming into the merger, and the metaverse brings the NFTs and also the digital twins, these goods coming to being can make the on-chain, this real stuff, and also RWA, the on-chain real stuff get better. But another thing is I want to talk about my understanding of the 4-year cycle of the prices, whatever Bitcoin prices in the whole crypto world. Because of back to 2016, while I first coming to the crypto, it's a long time, almost 9-10 years. When I bought my first Bitcoin, that time I was studying Stanford. I joined Stanford Blockchain Club quite early, and I wrote a paper about the Bitcoin valuation model, the equivalent of the mining. So I find that the miners of the Bitcoin that can push, or this inner power for running all the Bitcoin prices up and down. And that because of still until several months ago, because of this month, I didn't track the data very closely. The miners, the Bitcoin the miner owns still kind of dominates the market. So that's why from the currency standpoint, if you treat Bitcoin as a currency, like every 4 years it get a halving. It's like how the currency get inflation and deflation. So that's why the circle continues.
It rocks up the dynamic for the miners for real, and how they try to make a profit in US dollars.
Exactly. And also 4 years, that's how the inflation, deflation of the US dollars. So that's why we see, and also I predict, I do firmly believe this cycle, the Bitcoin still can get up in next few months. But the end of the 2025, we could see a big hype and peak and then dump. That's what I firmly believe. But next cycle, if the Bitcoin that owns by the miner that keep like dumping because of, like the Wall Street is now taking over most of the market shares. Until now, it's still okay, but I do think in the next several years, they will take more shares, and that cycle could not exist. But I still need some data to firmly prove that. So I believe this cycle, we will see Bitcoin pumping up again, but next cycle, maybe not 4-year cycle again.
If I can add to how the RWA players see this cycle is, when there's bull market happening, obviously there are a lot of yield options within the native DeFi protocols and all. When the bear markets hit, there's not a lot of avenues to generate a lot of yield from the DeFi native markets. And what RWAs and tokenized product really provide is a market uncorrelated potential yield opportunities. So RWAs in that sense are actually present that bear market, crypto bear market alternative, and particularly asset class like
healthier bear market.
Precisely, and like in a completely heated bull market of Web3, the boring yields coming out of TradFis may or may not be very, very attractive to most of the degen community. But in a bear market, when the yields in the likes of RWA and compounds kind of crash to 1%, 2%, as we saw in the last cycle, suddenly, many RWA fixed income instruments become quite attractive overall. And particularly, there's this one asset class called private credit, which is not only uncorrelated completely to the Web3 and crypto ecosystem, but also to the public markets and stock markets. So this is one asset class that will just continue to, see, continued adoption is what I foresee, because private credit actually is the asset class which is really driving the real world economy. These are, credits which is going to real world small and micro entrepreneurs, in the form of private credit funds and in the form of like institutional lenders. So it kind of really provides almost like a hedge or an uncorrelation to not just the crypto markets, but also to the public markets, which means kind of this could be an asset class that kind of becomes part of a mature investment professionals diversified bucket in that sense.
That sounds great.
Yeah.
And I'm sorry to cut you off, guys, but we're out of time for this episode. You've been a great pair. I really like how we moved from RWAs to AI and back and forth. It was been a lot of fun. You want to tell people watching this how they can find you and how they can learn more about Minara and hopefully start using it soon?
Oh, wow. Yeah, that's definitely the most important thing.
Well, I'll go pick up my phone quickly.
Oh, okay. Yes. Yeah. Okay. Cool. So, just come to follow Minara.ai, the Twitter, and you can just also search Minara Minara.ai, and you get into our website, come into our Discord, and join our waiting list since our still the beta launch. So get our invitation code, and then you can access to it. But 1 month later, which will be expected at the end of October, we will get full launch, and you can use all the full access and features of the Minara. That's fascinating. And you will realize how Minara good it is when you reach out to it. And hopefully you guys can all enjoy how to analyze and trading for Minara. That's it.
Okay. You want to tell people where they can find you?
Yeah, I mean, like you can find us on Helix Fi, all our socials on Telegram, on Twitter, as well as our website, helixfi.io. We are right now running an incentivized testnet campaign on Monad, and we'll be getting into, so Helix Hub is a very community-driven platform that we have, which is basically an RWA education come incentivized testnet campaign. And that will be followed by a private beta mainnet launch in Q4. So look forward to that. But follow us on the socials, and you'll be updated.
All right, beautiful. Yeah. And if you enjoyed this episode, please like, subscribe, all that. I'm looking at the camera now. I'm also looking at you, but looking at the camera.
Absolutely.
And Also, yeah, obviously both Minara and Helix are integrators of particle networks, chain abstraction solutions, universal accounts. If you're a Web3 developer, we'd more than welcome you to also integrate it, and we're happy to support you with this kind of podcasts and these kind of initiatives. It's always great meeting the builders using the infra, and thank you so much, guys.
Thanks a
Come
lot for
on,
hosting
baby.
us.
Thank you.
It's a pleasure.
Cheers.